Hey, everyone. It is Ashley and Bill for another mortgage moment. I'm Ashley Tullis, a local real estate expert here in Dripping Springs, and my co host is Bill.Roegelein, a lender in all of Texas. And today we are talking about the different types of products when you borrow money for a house. So it's a little bit more complicated than, hey, banker, give me some money for a home. Talk to me about that.
Yeah, it's good to be back. Thanks. So it's kind of mortgage 101 here is what kind of loans are they? What benefits me? What do you suggest? First time home buyer. I've owned a couple of homes. So we'll break it down as simple as it can be. So your basic loans, and I'll just list them off and then I'll talk a little bit about each one real quick. We've got a conventional loan, which is your pretty cookie cutter loan. It can vary from 30 years to 25, 20, 15, 10. You can do them as long as you want. Obviously, payment would vary on there. FHA loan, which is a government loan, and probably usually has the least amount you need to put down for a loan in most areas. VA loan, obviously it hits for veterans. So obviously you have service in the military. There are different stipulations where you could use it if your spouse was in the military and so forth. And then the USDA, which is another one, but it's more for rural areas outside of your major metropolitan places. Great program because it's another one you don't have to put a down payment down and utilize. So real quick, conventional, then obviously, jumbo loans, which is a whole different subject, is mainly for larger loan amounts. The conventional loan limit as of today is officially published, and it's $766,550. So any dollar over that amount, you're in the jumbo category. And we'll
If you're
talk about that.
borrowing, not
Yes,
the
if you're
home,
borrowing.
you're
Just
borrowing it.
yes,
Okay.
if you're borrowing, your loan amount is over that amount, then it's the jumbo. That's something we'll chat about at a different time. So conventional loan, normal is at least 5% down. Okay, you can do 5%, 10. You can vary where it is, but you have to get at least 20% down to get out of mortgage insurance. We talked a little bit about that last time. You can do as little as 3% down, but there are usually some stipulations. Depends on the borrower, how strong they are, credit scores, and so forth. So that can be a great product for individuals that don't have a lot of money to put down. I would suggest that this favors people more with better credit scores, because the better the credit score, generally the better the mortgage insurance can be. So that's where I kind of break it down, the situation of the individual and what makes sense. FHA loan, which is probably the best first-time home buyer product out there. 3.5% down, it's standard. You can generally have lower credit scores to qualify. Conventional usually need about a 620 and up to qualify. Some lenders, FHA, you can go with us. We can go down as low as 580. Some you maybe can find go a little bit lower. So it hits a bigger range of borrowers. The debt ratios can go higher for these programs. So really falls more in line with a first-time home buyer, especially because maybe they don't have a lot of a credit established. Hey, they have less funds to put down. But it's just a great product overall. So 3.5% down. There is mortgage insurance on it. But hey, good thing is as you build equity, you can refinance out of that mortgage insurance down the road. VA is obviously for veterans. So you need to serve in the Army, or the military in any form or fashion. National Guard can also be part of that, certain stipulations. Even spouses, hey, my husband served, or my wife served, whatever that is, can be available for VA. Great thing about VA, and it's a great program if you can use it, 0% down. You can finance at the whole house if needed. No mortgage insurance. And depending on the veteran disability status, might not even have property taxes. So great program overall. So I'd highly take advantage of it if you can. And then USDA loan, again, you can put nothing down, which is great. There are income limits for that program, and obviously has to be USD eligible. Great thing is there's a nice tool online where you can put an address in and see if this house that you're purchasing in is USDA eligible. Then you have to kind of go by income limits for the household. How much money does the household bring in and have to fall in the line? Okay, so it's a great product. Again, there is mortgage insurance, but it's actually very low in addition. But when you can find these areas, and since we're in the Austin area and people listening in the Austin, almost every community out in Jarrell is a USD eligible community.
What is
So
that? Bill, will you share what that acronym means? Because I think it'll make sense when people hear what that acronym actually means.
the United States Department of Agriculture. So
Yes.
they call it agriculture because it's, rural areas or so much. But yes, that's what it means. But again, when you find yourself in that area, it's something great to look at, again, because if you don't have a lot of assets to bring to the table, it's a great opportunity to get into something with very little down overall. So we got the conventional. We'll find out who fits in that. Again, I think it favors more, and just my opinion, people usually with some better credit options, or if you got a bigger down payment, it could benefit you if you can get out of mortgage insurance. FHA is something I streamline people to with first-time home buyers. Don't have a lot of money potentially to put down. Also with down payment assistance programs, the FHA, those all seem to be the best option for individuals. And that's usually what pairs with a lot of down payment assistance programs is FHA loans. VA for veterans, 0% down. Let's make it happen for someone, especially for the service they gave us. I mean, it just makes sense to have such a great program for them. And then USDA, another 0% down opportunity. Minimal mortgage insurance, just have to be in the right area. Good thing is there's great tools online for finding out if that is an eligible area and what income limits are. But hey, speak to me, lender that can help educate you and find that information out for you to see what fits best.
Love it. Love it. Well, I really appreciate, I like to simplify things. The Explain Like I'm 5 version of each of these programs. What do they mean? Because it's a little bit more than, hey, Mr. Bankerman, will you give me some money to go buy a house? So
yes, and just remember, just ask the questions. What program fits you? My job is to make sure the program benefits you in every single way possible. So just remember that when you're having that discussion.
Love it. And we always do a sign off here, but I'm not sure if we've ever put it out there. Bill, what's your phone number so people can call you directly?
Please, 512-659-5925. I don't know if we can blurb it on the end of the screen, but I'm available cell phone and weekends. That's what makes it great is I know how important it is when you're shopping, and especially over the weekend. I'm not a bank. I don't work banker's hours, so I am available. So don't hesitate to reach out.
Well, thank you so much, Bill. We will see you next time for another mortgage moment. Appreciate the rundown, and we'll see you soon.
Talk to you soon.